In our last live stream, we told you that cryptocurrencies would have to keep falling, and that's exactly what happened. In this video, we'll explain how Bitcoin's price could be affected by these highly positive news coming from the United States. Things like the removal of the requirement for DeFi platforms to report to the IRS, the SEC dropping its lawsuit against Kraken, and what could happen at the first US presidential summit on cryptocurrencies, which is set to take place in just 2 days. After the announcement about the US government creating a strategic cryptocurrency reserve, we saw a strong bullish move across the crypto market. As we discussed earlier, in the long term, this is a very positive development, definitely something worth considering. But of course, long term and short term are two different things. What really caught our attention was how this bullish impulse, triggered by news that the average retail investor would immediately perceive as positive, ended up reacting against such a key structural level. In other words, it came to test the origin of the breakout, a key area where price tends to react strongly. And of course, after the test and observing the next price movements, not just in Bitcoin but across the entire crypto ecosystem like Ethereum, for example, things got even more interesting. Then came Donald Trump's big tweet, hitting right at a key level. Friends, be a little suspicious. This is exactly what I told the Crypto Insight Premium team. Sure, I had it in mind that there were shorting opportunities in the market here, but it's one thing to recognize them and another to be reckless and try to sell into that move. Without a doubt, it was all a bit crazy. However, once we had confirmation of our hypothesis, that's when we started looking at lower timeframes, identifying key structures where we could sell crypto to ride the continuation of the downtrend. We did this on the same day we released our last video, where we discussed how positive this news would be in the long run. I really emphasized the importance of distinguishing between the long-term outlook and the immediate reaction. And that same day, in a live session focused purely on the short term, we were actively looking for short setups in the market. Like I was saying, this happened across the entire ecosystem, not just in Ethereum. XRP also saw an insane surge, even breaking through a key structural level. So the idea was that when price reached this area, we expected it to push up a little more so we could look for a setup around this defense zone, open a short and short the crypto market. All right, let's take a look at XRP. Man, the thing is, what really needs to be considered here, right? It's how these assets reacted after Trump's announcement. At the time, I saw it, but I didn't take the short. I mean, of course, I thought about it, but I didn't seriously consider it. For different reasons, sure, but in the end, come on, it was odd to think that from this point, even with that news, price would just break straight through and keep going. That never happens, or well, almost never. This is one of those cases where you had to be seriously suspicious. But being suspicious is one thing, and throwing yourself in front of a speeding train is another. You don't have to be reckless. Even if it was clear that this move wasn't likely to keep pushing higher indefinitely, that didn't mean. Well, first of all, it's important to see that reaction, of course. I mean, price breaks through a key structure and immediately responds with force, like it's saying, hey, don't get ahead of yourself. The selling pressure is here, defending this key level. That's the message we're getting. Now, could this just be a simple correction? Sure, maybe it still has momentum because, in the end, this kind of reaction is excessive. Think about it, this was a short-term move, a 30-minute reaction. This was pure FOMO. That's all it was. So, am I saying that the US adding crypto to its national reserve isn't a big deal? Of course not. It's obviously great news, so obvious that even a 5-year-old would understand that. But that's not the point. The point is that seeing such an immediate reaction in just 30 minutes, you can't extrapolate that. It doesn't mean anything. It holds no real weight. What we need to focus on, and let me bring the asset back up, is this: for me, they simply overdid it. That's all. They went too far, and that's fine. It happens all the time. They just pushed it a little too much. That's why we've now seen this false break of the creek. At first, anyone might panic and think, oh no, this is running away from us. But no. In this case, understanding the context, we can ignore it and assume that at some point, the real breakout will happen and price will actually move. But of course, not everything that shines is gold. As you can see, despite the big news that initially sent crypto soaring, even we said in a previous video that this was positive for the long term. However, this long-term optimism has little to do with what happens in the short term. These are two completely different things. And this is exactly where newer traders might struggle to fully grasp the difference. If you feel like you're in that group, don't worry, it's completely normal. You probably haven't been in the investment world for long. Just be patient, give yourself time, and as months and years go by, you'll start to see things differently. Now, let's briefly talk about the traditional market. Here we have the SP 500 on the daily time frame, and we can see how its price has moved toward a key defense zone we've been watching. You might remember that, in the past, we were looking for a black swan event that could send the SP 500 sharply lower. We placed a lot of importance on this last failed bullish attempt, because that failure led us to believe that the markets had to drop. Now, what we need to focus on is where the SP 500 stands at this moment. It's at a critical level, it's still holding. But of course, no investor, and I'm not talking about traders, I mean investors, likes to see a 6.7% drop in such a short period. However, for us, who analyze the markets from every angle, we can tell you that we're still within a structure that continues to offer support. What we're saying here is that there's no major black swan event threatening the SP 500 right now. It's still very much alive, and that of course, is a positive sign for the crypto ecosystem. Now, let's take a look at the Nasdaq, because we've been saying the same thing here. What really caught our attention was this failed breakout attempt. It made us consider the possibility of a creek break, which, in the end, is exactly what happened. Of course, we've covered all of this in previous videos. Once that break occurred, the next logical target was this trend line, right where we are now. This is a key level, a real turning point, and so far it's holding, even though the traditional market has dropped significantly, because let's be honest, it's been a massive drop. In just half a month, it's lost about the same amount of gains that these indices typically make in an entire year. But as I've been saying, just like we identified a micro black swan here, if we really wanted to be extremely bearish on the traditional market, we'd need to see a macro black swan event. And right now, we don't have one. That doesn't mean it's impossible, but as of now, it's just not there. Everything is still holding, which leads us to consider the possibility that we're reaching a market extreme in the traditional sector. And what a coincidence, because we're thinking the exact same thing when we look at the crypto ecosystem. Now, let me explain what could happen with cryptocurrencies, but before that...
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Let's talk about some news that I consider very important for the long-term future of the crypto ecosystem. The U.S. Senate has passed a resolution to repeal a Biden-era rule that would have required decentralized finance protocols, DeFi, to report directly to the Internal Revenue Service, the IRS. Now, this resolution moves to the House, where it will need approval before being sent to President Donald Trump. And we already know what Donald Trump is going to say. The only step left is for it to pass through the House. What this really means is that taxpayers will need to report directly to the IRS without an intermediary being forced to take on that responsibility. We see this as a huge step forward for crypto adoption, because the idea of trying to force a decentralized exchange to report to U.S. tax authorities is completely absurd. Of course, this doesn't mean that everyday citizens are exempt from reporting their DeFi holdings to the IRS, but at least we're no longer forcing a third party to act as some kind of informant. Another major piece of news is that the SEC, the U.S. Securities and Exchange Commission, has agreed to drop its lawsuit against Kraken. We need to remember that the SEC sued Kraken back in November 2023, claiming that the exchange was acting as a broker, dealer, exchange, and clearing agency without registering with the SEC. Of course, that's the SEC's version of events. Under Gary Gensler's leadership, the agency was pushing a policy of regulation by enforcement, aggressively suing or investigating crypto companies. In other words, instead of creating a clear regulatory framework that companies could follow to avoid penalties, Gensler's SEC preferred to leave the rules vague, crack the whip, and punish whoever they saw fit. It was clear that Joe Biden's administration was anti-crypto, and if someone still doesn't see that, they have a problem. But now things have changed. Donald Trump, a pro-crypto president, has arrived, and he's bringing order to the White House. Now, the SEC is either dismissed or is rumored to be dropping multiple lawsuits and investigations that were launched under Gensler's leadership. On February 27th, the SEC dropped its lawsuit against Coinbase, and before that, it had already withdrawn cases or investigations against Consensus, Uniswap, OpenSea, Gemini, and Robinhood. And it looks like the U.S. wants to keep delivering good news. In just 2 days, on March 7th, the first ever cryptocurrency summit organized by the U.S. government is set to take place. According to Sachs, the U.S. President's AI and crypto czar, on March 7th, key founders, CEOs, and investors from the crypto industry will meet with members of Trumpist Digital Assets Task Force at the White House. The goal, presumably, to discuss policy matters related to cryptocurrencies, blockchain technology, and a potential regulatory framework. Among those confirmed to attend are Donald Trump himself, Ripple CEO Brad Garlinghouse, Strategy Executive Chairman Michael Saylor, Chainlink co-founder Sergey Nazarov, Sachs, and the task force's executive director, Bo Hines. As you can see, real events are unfolding. The Senate has already passed a resolution to repeal the IRS rule on DeFi brokers. The SEC has dropped its lawsuit against Kraken, and now, just 2 days after Trump announced plans to create a U.S. strategic crypto reserve, we're about to witness the first White House summit on digital assets. These are all incredibly positive news. Now, let's take a look at how all these developments could impact Bitcoin's price and the broader crypto ecosystem. If we've been saying that the Nasdaq and S&P 500 were reaching market extremes, then notice how Bitcoin has also broken through a key trend line, something we need to watch closely. It has also come back to test the origin of the breakout, which definitely keeps us on high alert. But as you know, we were already looking for buying opportunities in this zone and this one, because we are still operating within the market extremes hypothesis. And if we cross-check this with other assets like Ethereum, we'll see the exact same thing. The price has once again dropped to test test that key defense zone, which smart money has been aggressively protecting. As long as Ethereum holds this structure, we can remain positive about the crypto ecosystem. We don't yet have a catalyst to believe things will spiral out of control. Looking at assets like XRP, we can see that its price action remains extremely strong. Nothing negative to say about it. Of course, if XRP were to break below its defense zone, then we'd start to reassess some things. But take a look, we're still far from that scenario, just like with Solana. Yes, Solana has broken its upward channel, but it's thrown us a life jacket right here. And as we mentioned in previous videos, these are optimal buying zones. As long as we don't see this structure breaking down, we can still consider the hypothesis that this could be a market trap, setting the stage for a strong upward move in the future. It's just a hypothesis, anything can happen, but that's what we're evaluating. With BNB, we're in a macro uptrend channel, and look how it's holding its structure. You already know how price moves within a channel. It goes from bottom to top to bottom, here from top to bottom again, then bottom to top, and you can see how the pattern continues. Right now, it's moving downward again. Notice how price always gravitates toward a pivot point, and we're currently at a key, very interesting level. Remember, we're not trying to predict price movements here. We're more focused on identifying the next big long-term investment opportunity. That's what we analyze in our YouTube videos and in our live sessions on Crypto Insight Premium, where we look for the best futures trading opportunities and execute trades that stay open for just a few hours. And here we have Chainlink, where we analyze the POC of this entire reaccumulation process and see how price is respecting that real liquidity exceptionally well. This is liquidity that actually exists, and the only thing that can show us that is volume. I don't get fooled by liquidation maps. No one really knows where that data comes from, and people just take it at face value. Instead, focus on understanding and studying how volume works. Volume provides objective data that actually exists. It's the same for everyone, and we know exactly where it comes from. Of course, the data will vary depending on the exchange you're using for your analysis. I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or buy DFI. Have deposited cryptocurrencies into your BitUnix or buy DFI accounts with a minimum value of $100, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. And what better time to do it than now? Our friends at BitUnix have set up an exclusive promo for new users where they'll cover up to $100 in losses. So if this is your first time trading and you're looking to join the Crypto Insight Premium Telegram channel, you might want to take advantage of this safety net in case of potential losses. Remember, BitUnix is an exchange that doesn't require kite and doesn't need a VPN to be accessed from anywhere in the world. To make things easier, I'm leaving you the BitUnix promo details in the Crypto Insight Premium Access form in the description and pinned comment of this video. As you can see, the crypto market is still holding up key structures very well. It's not just Bitcoin, Ethereum, or XRP, but also other assets like Solana, BNB, Link, XLM, and SUI that continue to hold strong. This tells us that not all is lost and that we can still maintain a positive outlook on the crypto ecosystem. If we look at MicroStrategy, we can see that Michael Saylor's move is still very relevant. There's even a chance that this is just a trap around a key structure before a potential bounce. And let's not forget that the traditional market is also holding firm. The SP 500 is standing strong, and Nasdaq doesn't want to be left behind. If you think about it, there's still room for short-term pullbacks across all assets, and even if they dip a little further, it wouldn't be the end of the world. Now, if at some point in the future we see a black swan event that triggers an aggressive downturn, don't worry, we'll be here to let you know. For now, we can still maintain a positive long-term outlook. And if you're wondering what we think about the short term, well, this morning, during our daily Crypto Insight Premium live session, we were looking for short opportunities in some very interesting market extremes. Now, we just have to wait and see how far the market wants to take us with this intraday short setup. At the very least, the positions are already covered, and if the market decides to give us a good move, we'll take it. And if not, no worries, we'll be back tomorrow looking for more opportunities. If you found this advanced technical analysis interesting, let me know in the comments. Also, like the video, subscribe to the channel, and hit the notification bell so YouTube can alert you when we post new content. Good luck with your trades, and see you next time.